General advice, warning and disclaimer. Opinions, thoughts, research, recommendations and content presented are general advice only. They do not take into account your specific circumstances. Please consult a financial professional before making any investment decisions. For further information on our disclaimers and general advice, please see our website and our PDS. G'day there. Welcome to this week's edition of Bulls vs Bears. Jonathan, welcome.
Mark, and hi viewers or listeners.
So basically this week, here we are, even despite today's turmoil with Israel firing missiles at Iran, and still only about 3% from record highs. Stocks near record highs as the world falls apart. It's been most of the calls I've been fielding this week have been around, why aren't we fully allocated? And Israel Iran is Exhibit A.
Yeah.
So
why don't we have more Commonwealth Bank? I'm guessing they were asking.
Yeah, essentially. The short answer to that is we're not a lazy fund manager, we're benchmarks. So, but interestingly, in the investment committee, Henry Jennings pushed for CBA to be added to on Ausbiz, the fantasy portfolio. So, even blokes I respected, and I use the word respected now because have fallen into the trap of buying something for the sake of benchmarking at the most expensive any bank in the world has ever been. I think the disconnect from Wall Street to the real world is just dramatically increasing these days, and which it tends to do before there's a significant move.
Like, as I say, the stock market isn't the economy, so what's happening in the stock price doesn't actually reflect what's happening in the real world out there.
Yeah, so we ground up high this week, rejoicing on softer inflation numbers, but everyone seemed to ignore the fact that they're now, because of the Doge job cuts, they're now sampling like 3 less major cities, and also the fact that whilst there wasn't really going to be a huge amount of tariff increase because it was only in for a month, well, not even for a month, and it doesn't give businesses time to pass that on. So,
yeah, exactly. Well, that's the thing. Like I remember, was it yesterday, Thursday? Yeah. So I said, softer inflation and the trade deal done. Why isn't the market higher? Because so generally, what I tend to look for is how news affects markets. And generally, if it's bullish news and the markets keep going this bullish way, you're like, okay, it's the trend's going to keep going. We had a softer inflation print, I believe, Wednesday night. Trump claimed the trade deal was done.
Yeah, emphasising the word claimed there.
Yeah, that's right. But then I remember there was a massive pop in European hours on the futures on the back of that. I went to sleep and the S&P was down. And I just went, okay, that's the first time I've seen that phenomenon for a little while.
Yeah, well, when I wake up in the morning, I play a little game as I'm waiting to, or get on the train to come to work. And I open up the app and go, where's the S&P, up or down today? And I fully expected it to be up about 2%, and it was down. And I was like, maybe I think we're getting to exhaustion levels. And look, I haven't been anywhere near as bearish as normal, but because I've just come to realise that the market just stretches more these days, and I shouldn't be surprised by a rally that is never happened in stock market history out of a low when nothing's changed.
Obviously, I don't know what the stats are now. I remember they say 70% of actual trading is algos now, or computer driven. I don't know what the actual percentage is these days. I think it could be even more. But as you're saying, like, it just stretches in one direction. So I think there's more momentum algorithms that take control.
Yeah,
so and when they see momentum, they're like, okay, let's just back.
Yeah, they just jump in. And look, no exchange in the world showing it more than the ASX, really. It's like we may as well just shut the thing down and trade and just trade 5 stocks. But I did the call on a late call up today, and obviously we're going to get to John's lead group here now anyway. But it was like I think I've had it you've had it, and then I've had it twice in the last 3 weeks. And thankfully, because there's been a private equity bid this week. Well, a bid,
with no price.
With no price, rumoured to be 900 million, which would put it up around 318. Thankfully, I didn't have to do my research on that because we hold it, and it's our most whinged about stock because it hasn't gone well particularly. We did average for some people who trust me, and for those who didn't, they're still down probably 15%. But for those who averaged, we're nearly at that 310 level it got to this week. We were pretty close to flat.
So maybe you've missed your calling as a value investor.
No, potentially, and I think the holders of clarity would testify to this. Is that if I say dollar cost average, maybe miss the first price and just do the next 2 or 3. Because I've got a very bad habit of being a touch early. There's copper, silver,
and we're not talking a day early.
No. I'm thinking that I should have a diary where I write 6 months ahead and I look at it then. Because my strike rate's pretty good. My timing, sometimes not so much. But you can't be in if no one knows. If no one else is paying attention, there's not much point, being in it. But I've managed to be on with the fellow Andrew Coleman and Team Invest Private, which spawned out of the Team Invest Club, but they're very big in private equity, and I actually happen to be friends with the private equity CEO there as well. But they basically, he's the only other analyst in Australia that understands JLG and actually is bullish on it. It was an overwhelming double buy, and basically I said I think they'll knock back. They'll knock back 900 million, and because that catastrophe stuff's going to start to come through, and the insurance claims are in now. Very smart from the private equity firms to be bidding for this now, because at the prices it was at 250, it was cheap on business as usual without catastrophe. So with the catastrophe, that's basically that catastrophe guarantees 3 years of their pipeline being oversubscribed by about 150%. And it's high margin. Yeah. So depending on how much they get of it, of course, but they're in with two of the biggest insurance companies in the US, where there's been, the 4 horsemen of the apocalypse have pretty much gone through with the hurricanes and the fires. And then the East Coast, they dominate here with QBE, where we've had floods. So I think there'll be another bid. He didn't disagree. And there has been 2 other private equity firms sniffing around earlier on in the year that they basically.
Well, let's just hope they go for a $5 bid. That'll clear everyone out.
Well, when they passed on the previous 2, or they didn't engage with the previous 2, the price was at $4. So, fingers crossed. Obviously, you shouldn't. But I mean, it just goes to show that. I think my words were, the analysts just suck at this stock, basically, because JLG.
No, because I remember, because on the way up they were like, "Oh, this business as usual is worth so much."
Well, no, which happened to be that they just didn't define catastrophe and business as usual, and then they went, "Oh, don't they happen all the time?" So they overvalued it to the upside, and then they've undervalued it to the downside. So basically, there are some stocks where analysts are no help at all. JLG is one of them. But an overwhelming trend of just private equity. Basically, the management of JLG, founder-led company as well. He owns 20% of the company. They're just sick of the ASX. They're sick of the ASX's illiquidity and the analysts not even bothering really to make an effort to understand the business and then throwing out an arbitrary recommendation.
Yeah.
So, and I'm, to be honest, I've been pretty annoyed at, the reaction, because it's trading at a heavily discounted price, but I was kind of hoping we'd get back to $6 or so over the next 12 to 18 months, because you're going to have a chock-a-block pipeline. But if they get taken out, they get taken out. So I'm praying that they don't take the private equity partners bid, Pacific Equity Partners bid, which is rumoured to be 900 odd mil. So that would be a disaster.
Yeah.
Not for existing shareholders, Not for them because they're getting quality asset cheap. But
so last I saw it was trading at 293 thereabouts. You get up to about 308 thereabouts on yesterday's trading. So
wow. June 27th is when we'll know. In terms of whether they can try to engage other bids, they've got an exclusive non-binding until the 27th, and then so someone else can come in and bid unsolicited, but that's probably unlikely to happen.
Mm-hmm.
If they rush too much, it's a bit of an auction process. But then I think they'll go and rustle up some interest after the 27th. So
yeah,
and then I think we got till July 11th. But there's not even a price yet. So
yeah, that's an interesting thing. Like they didn't disclose the price as well. So I saw an AFR article. Basically, it was tell them the price, son. It's the old carpet ad.
the carpet ad. God, it's going back. But yeah.
So the rest of the ASX. So we just talked about JLG, Monash. I don't know if you read the news, but they had another stuff up.
Yes.
So they had the first stuff up was in their Brisbane office. Same thing happened down in Melbourne.
So the CEO's fallen on his sword.
Yes,
is he not?
He's resigned overnight, and obviously someone has to go down. Accent Group came out with a profit warning today, down I think about 15% on today. I remember I had it on the call last week, and it was a technical analysis special, and I'm just like, if a chart's going up to the right, I'm happy to buy it. There's some great retail names that are just being bid up, obviously, like JB Hi-Fi's, Wesfarmers, like YB in that stock, and it just showed profit warning right there. So they have from memory, what were their two chains? They've got Skechers and
Glue.
Yeah, that's the one. So not doing too well in the sneaker space there.
Yeah, but they had that. There's a new brand that starts with H. Anyway, they were a popular new shoe that was going well for a while. I mean, look, you got it. It is
Hoka.
That's the one.
Yeah.
Hoka, yeah.
They look horrible in my opinion, but they're popular. But I'm just showing my age,
yeah.
A lot of kids' fashions these days. I'm just like, oh my god, I'm getting old because that looks horrible to me. But a lot of kids wear them.
Yeah, well, I mean, for anyone who's actually viewing, you probably guess that we're not exactly joggers either.
Yeah.
But yeah, look, that's where. But look, fundamentals are less and less becoming part of the equation. So you've got to have a technical tilt overlaid with the fundamental tilt, because otherwise, the fundamentals just don't seem to make much difference these days.
Exactly.
If fundamentals made any difference, is I would say Wesfarmers, JB Hi-Fi, and CBA would be at least 20% lower.
Yeah.
So, but they're not. And
I think you
the mindless green robot is.
I think you coined it right. Like as you said, like fund management is a popularity game, and I think you can just apply the stocks. Like if stocks are popular, the algos like it, the fund management, whatever it is. Like if it's in vogue, people just buy it. So very hard to fight against that.
And realistically, I mean, like I said, lazy funds management. But if you've only got a 10 or 15% portion of the fund that is discretionary, well, you certainly your labour bill's greatly reduced because a 2-year-old could buy an index ETF. So
next slide onto US stocks now. Here we go. So 3 names. So Circle IPO. So Circle actually issued the USDC stablecoin.
Sorry, I did read about this. I didn't know what the
So $31 IPO, opened at 68, closed at low 90s, and trading at 106 now. So that's kind of like the crypto FOMO. So I think it's been trading 4 days, and basically if you got into the IPO, you've got a 4-bagger on your hands. Very popular trading stock at the moment. Tesla. So Elon's back at the hood, and they've got a robo-taxi trial lined up in Texas, I believe later this month.
I've done a pretty significant deep dive on Tesla for forward stuff, because I think it's showing value at the moment because everyone's hating on Elon, and whenever people are getting emotional about a CEO or a stock or whatever and ignoring the what's going on in the company, tends to pique my interest because there's probably some value there. But yeah, so they're going to do the Austin, Texas, that Waymo or whatever it is, or Wago. I'm not sure how to. The stats are just out of control. They're running driverless taxis, no one in them, and I've seen friends of mine on social media in them with videoing going there how they're freaking out. So only in certain sections of LA, I believe, 700,000 trips, unmanned cabs in a couple of months or something like that. And the volume of rides is just it'd be like the Circle IPO chart basically. It'd be straight up. So,
well, I mean, like, can you imagine how that will actually fundamentally change car ownership? So, if you can have a car that's actually more convenient than having to find parking, people just and if the costs were comparable.
One thing that they're talking about is Elon's saying you can buy a Tesla for yield. So basically, you would buy it. Technically, if the rules were correct, wherever it rolled off the factory, it would drive itself to your house. Seriously, as stupid as it sounds. And then you pick an area on your phone where it goes and services as a driverless Uber, and it pays you a yield. So a cross between Uber and
you'd be like, just make sure you're around here at 5 o'clock.
Well, no. It then autonomously runs on the Uber app and just goes and picks.
Yeah. But what I'm saying is, just make sure when.
Don't go to Miami from when you're in LA.
Don't take a big long fare at 4:30.
But it's the equivalent of owning taxi license plates, but without the driver.
Mm-hmm.
So that's more than car ownership. You know what I mean?
Oh, so, absolutely. There's a business opportunity there.
And as someone who has tested via rentals nearly every EV on the market, the Tesla AI and the auto drive, which is beta tested, and it gives you about 76 warnings. It's like, this works, but it's, you will be liable if it screws up, is significantly better than every other model. Like the way it'll read speed signs, it'll slow down for the speed signs. It's, collision avoidance but literally it went through a roundabout and took an actual turn without me touching which was the freakiest thing I've ever done in a car. My kids were in the back of the car and they were going, it did it, and I caved halfway through. I just couldn't handle it. And that was 2 years ago. So and all they need to do is, but any Tesla can be pushed the software upload and be doing this. So,
so even the
existing ones, well, not too old, but because the newer ones have better cameras and things like that. You'd have to have a certain model, for instance. But and then the robots are going to start selling next year. They expect to ship at least 5,000 units, and then they're getting into drones as well, potentially for military. Because the battery tech you can kind of apply to nearly anything, really. And that's where they've got the advantage. The addressable markets, I'm not even going to mention because my eyes started watering. But Elon's one of the only people in history that's revolutionised payment systems, then went on to
just whether he touches
cars, then went on to space. Like the guy's got the Midas touch. He makes Thomas Edison look lazy, and I wouldn't put it past. So, you probably just have to close your eyes. But at the moment we're at peak Elon hate, and I think it's potentially an opportunity with what's coming up because the drones will do delivery. So again, people can have they can be in the gig economy, but they can be at work when all are going to do is set a range, things like that. Well, if the robot doesn't take their job. All those manufacturing jobs they're bringing back to the US, I think Elon will pretty much consume those pretty quickly.
But I do understand the it's a lot
of what ifs.
Yeah, exactly. But I did have the that tax effective, and it was NVIDIA, Microsoft. Everyone, no problem with NVIDIA, Microsoft, but Tesla, pretty much I had to just actually ask people who drove Teslas, like, would you actually invest? They're like, yeah. And so I realized that as divisive as Trump is, Elon's in the same boat. Basically, it's a love-hate thing.
But if he shut his mouth, the stock would be probably 50% higher.
But he doesn't.
But he doesn't. So there you got to sort of see the opportunity, that maybe, and I think he's been burned pretty hard and he's been pretty surprised. Like when people started setting Teslas alight in the streets in Europe, he was kind of like, oh, maybe I should shut my mouth. And then he accused the president of the United States of being in the Epstein files.
Yeah.
But walked that back, which is very un-Elon-like.
Exactly.
So
when I saw that tweet, I'm like, I regret what I said.
That was. But despite it probably being true,
exactly,
allegedly.
Well, we'll probably won't find out. And the last one, GameStop. So that actually had a rally.
Oh, they bought a heap of Bitcoin, right?
Yeah, they have. They've got Bitcoin on their balance sheet, but they need a cap raise.
Well, if you're the CEO of GameStop, so this is the meme stock, which that Dumb Money movie was about, and essentially this is where the retail investors ganged up on the shorts in the stock.
That's right,
and they blew them away. There's a reason that there's a movie about it, because I don't think the insto investors will ever let it happen again. It'll be a bit of a once off. But when your stock goes to a stupid level,
you sell more shares.
You sell more shares.
Yeah, that's what they've done.
And about 3 times now. And then,
but I laughed at it because it's classic ASX. So as soon as you're in a specky miner that is rallying, it's like you can almost set a clock to when the trading halt comes and the cap raise comes.
Yeah, no, that's exactly right. And look, it's
mind you, they do it at a different scale. I think it was like 1.7 billion they raised.
Yeah, and then going, but that's the CEO doing his job.
Yeah.
Like, I mean, it's not his job's to run the company, but as a board, if people are going to do stupid things, why
take advantage of it.
You don't just sit there and be a passenger about it. And they can parlay it into, you got access to capital, parlay it into other things. So
like more Bitcoin on the balance sheet.
Well, but then they've probably done very well out of that as well. Yeah. Because if they did that one of the first ones, they'd be up 100% minimum.
Oh yeah,
that was about 3 years ago.
Was it?
Oh yeah, they've had a movie about it takes a year to do a movie.
That's true.
So and obviously Lockheed Martin as well had a cancellation of this is more so in detail in the written version of the weekend of the F-35s and the bit of defence spending reduction, which is about 8% for the US. But I would say it may recoup some of that tonight. I was lucky enough we got to choose our own stock of the day because of the Israel strike, and it was defence. And they said, "Oh, do you have a defence stock?" And I just curled my imaginary mustache and went, "Do I have a defence stock?"
It's like, how many do you want?
Yeah, it pretty much. I said I basically said, well, I could do a whole show on this, so I'm just going to do the ETF defend because that covers most of them that are in it. But that defence thematic that we've been talking about for quite some time now, and we've done structured products we've done,
and it'll pop up in our trade of the week as well.
Oh, I didn't I didn't realise that. So now.
So this is correct.
Well, this is as of last night.
As of last night.
So I would expect that to be a
little bit more
redder.
Tonight, yeah.
But Apple, yet again, another absolutely. I'm trying not to swear about how poor it was. So this thing called liquid glass. No, there's a new thing. But it's not even liquid glass. It's anyway. Another new camera, another crappy upgrade. So I'm calling it now. You've seen the high in Apple forever. No, there is no way. They are just so terrible at new products now that it's embarrassing. I mean, Steve Jobs, he would be spinning in his grave. Like they haven't had anything new for ages. I think that one upgrade in Motorola has those bendable phones where they're talking about those Meta VR glasses. Or actually, if there is a change in phone tech where the device changes, I think Apple will potentially halve or more, because 55% of their revenue is the iPhone. But also, once you lose, we saw what happened with BlackBerry. Once you lose
Your
the
device,
but then they're going to lose iTunes subscribers. They're going to lose the Apple TV thing. Like, they barely released one new thing. I just gave up subscribing to that. They release one new thing every 6 to 12 months. Like, Netflix has got about 20 things out in that time. So they've pretty much done they're sitting on an absolute pot of gold, and they've done the worst job of everything they've tried at for nearly a decade. I do not hold great hope for that company, and I think it'll be the next BlackBerry, basically, or the next Nokia. And there's two examples of companies that they thought they'll never go broke, and they did. So obviously. Costco surprises me, and Walmart. I think Walmart might have had a downgrade or a guidance downgrade overall.
There was some Oracle news there. I didn't.
Oh, Oracle knocked it out of the park. That was pretty much all last night in earnings. So, new record high. So it took them 17 years to recover from their 2001 high when they were the Nvidia of the market back then, and everyone. But they're actually getting heaps of new contracts now, and I didn't see it in great detail.
Is there stuff in data center? Like, I'm not very.
I think it's the data center thematic basically, and they provide infrastructure. So they're not necessarily chips, but I think they're
switchgear, whatever it is. Yeah.
So they're killing it. And good. Look, I love a comeback story. I wouldn't want to.
17 years.
No. It was 17 years to get. We're talking, for it to be mentioned and have an earning. That's the best earnings result. Well, move on an earnings result in 24 years. So, but you know what? Good for hanging in there. Larry Ellison's he's been the richest man in the world, back to nowhere, not even in the top 100, back to I don't know where he sits now, but. And they own a lot of satellite technology and things like that as well. So I think they're playing into the defence part as well. I was really impressed when they were looking at that. He's a big sailing fan, and because they lost the America's Cup, he just threw his toys out of the pram and started his own series. That sailing GP or whatever it is.
I remember that. That's
but the
that guys on bikes.
Well, and they're high. Anyway, they're But it was a low-cost Formula One of sailing, and it's quite well followed. But everything, basically, it was 2 shipping containers that travelled around the world, and everything got relayed back to Oracle, translated into 50 languages, and delivered to broadcast networks in under a second.
Wow.
And using their networking but so they've still got some game, and obviously now it's reflecting in the share price as well. So. So good on them. There wasn't any other. There wasn't much more significant news, I don't believe.
Just expect this part to be more green.
Oh yeah, the energy sector will be. I think Woodside's up nearly 7 today.
Yeah,
oil's up 8.
Our whole energy sector is just.
They're actually pretty cheap, those as well. I think oil's still the riskiest trade. I think it's the best. It'll be the best trade, but I think you'll have to be on top of it, because this thing can either escalate badly, which it looks like it's going to do, because they killed Salami, who was the head of the and there's already internet memes, who's the head of the Iranian National Guard, and they've said that they do not miss on the hyperbole. The Israeli Prime Minister and the Supreme Commander or the Supreme Leader of Iran, they're getting some of their press conferences are biblical. It sounds seriously biblical. The wrath of God and all this sort of thing.
Okay. So I think that brings us back to the fact that are we glad that we live so very far away from that? I hate to actually live anywhere near that at the moment, because well,
we don't live next door to someone who's whilst has vastly different religious views, also, despite sanctions, is sitting on the world's biggest pot of money because they've got an absolute crap ton of oil with Iran. So, but essentially, they've enriching uranium. Everyone's like, nah, that you can't do that. Then they turn around and say, well, we are going to do it. That's why. So it's probably the first time that Israelis have been, no one's really having a crack at them about the missile strike. They're like, please do. And we don't want them to have that nuclear weapons. But I would have. Well, it depends on whether we use futures as the mark or last night's settlement, but I'd probably be slightly right on my call from last week, bullish or bearish.
I remember at the.
It's going to be at the close.
Yeah, so I always say it's from the Thursday
close of business.
Thursday night to Thursday night. Basically.
But I literally today's futures move, which is 2%, was the difference. It hasn't really gone on with the job. Or now there's been a catalyst. We'll see what happens tonight.
Yeah.
I think most Americans think Iran and Iraq are the same country. So they might walk in and buy it tonight. Who knows? It wouldn't surprise me. So commodities.
So platinum's
still killing it.
Massive 2-week move.
What, I've never regretted removing nickel so much. Platinum is just my favourite thing in the world.
So crude, that's actually all this morning.
Yeah, it's all this morning.
And uranium as well. Is that right? Bitcoin up 5%?
No, that's not. That will be as of this morning's settlement. So oil will have gone again.
Oh, okay, fair enough.
Yeah, no, oil was already up. They evacuated troops in Iraq last night and embassies and stuff. So this was very much on the cards.
Okay, yeah, fair enough. Because like gold's up.
Gold's up again as well. But platinum's drifted off. Silver normally doesn't benefit too much from geopolitical because people switch to gold, but it actually is. It's up 0.7. Copper usually doesn't do particularly well. Your industrial metals don't tend to do as well, and obviously platinum being industrial. One interesting thing is Goldman Sachs released a global recommendation to sell platinum because because it's gone too far, which screams of oh crap, we got caught short for platinum. And I tweeted, I've never seen a stronger buy signal, and I believe it got about 1,700 views. So it's
when Goldman Sachs is
they were doing that in lithium for ages, but silver. My Twitter feed now, I've almost got to mute the word silver because it. So if it can just hang on to gains and stay here for the next week and consolidate, and the silver bulls just calm down. I know you've been waiting 15 years for this, but chill.
Yeah. One thing I did see with silver, like it did get hit overnight, but then it just rallied straight back up.
It's showing positive price action, but it was just like. You got to understand, there's people that had bought it back in 2011 that just got back to break even. Like, you're kind of sitting here going, well, it's my time to shine, and excuse the pun, and then but I do think now both of those metals pushing through. I think that's generally really positive on a long-term basis.
Yes, absolutely.
And maybe just. As long as it doesn't come back into the range by the end of the month, I think they'll both be right on a long-term basis. So, good, probably not bad. Let's not. Uranium's obviously the World Bank would not lend for your nuclear projects after Fukushima until this week. So the World Bank now will lend to, I'm assuming, poorer countries who want to build nuclear infrastructure. That's a pretty big deal, and there has been 2 or 3 other major, deals from. Wasn't Amazon? Amazon and Meta have already done it. Microsoft's already done it. The company, but there was a major Taiwanese companies done who are in tech for data centers as well. But there's now we're getting into double digits now of major deals done for companies restarting public infrastructure for nuclear, and everyone's kind of all for it. So the two most shorted stocks on the ASX are Paladin and Boss. Cameco is at record highs, but Oklo, NextGen, Centris, and those other are also some of the most shorted stocks on their respective exchanges. So uranium globally is very much shorted. So watch this space, because they're going to
if that short squeeze.
Well, they're 20% short into the Australian market. So that'll take. It's roughly about a month of average daily volume if they're the buy side of every trade to get out. So they, there will be a breaking point, because it's from a government level, and
well, not just governments now. Now it's actually the World Bank. One of the hamstrings with infrastructure is always financing. So now that you can actually borrow money for a project, I think it's going to take off. Yeah. So
I did a thing. Thank God for GPT, and because there's no way I was ever going to work out in market cap the five of the Mag 7 that are involved in needing AI and data centers. They would be the 8th largest, 8th, 9th, 10th, 11th, and 12th largest countries in the world if they were a country. If you market cap to GDP. So it's very, and let me tell you, sitting on a hell of a lot more cash than because government debt's through the roof, because those companies have been raping and pillaging the tax system for about a decade and a half. When you've seen government debts go through the roof and company debts, there is no company debts for those. They're sitting on about 750 odd billion in cash. And just continually doing buybacks. So all they need is they need more AI chips and more power. They're not going to let a pesky thing like regulation get in the way or whatever. They're going to spend.
Yeah, absolutely.
Because they can monetize on the other side. Whereas governments will spend because it's like, oh, crap, like it's infrastructure. These guys are like, they're going to make money out of their infrastructure. So they're going to be motivated. They're going to put nuclear into Starlink as well in Texas.
So I would like to see, because there's a lot of talk about the next generation reactors. So I'd like to see some of those get approved. So that'll be interesting.
Yes, the small modulars would be great. Because they're basically the size of a shipping container, and you don't have to feel like you've got Monty Burns in your backyard with a massive nuclear power plant and worried about three-eyed fish.
I've seen, you can power, say, remote mining facilities with a reactor that's the size of a hot water heater.
Yeah, right.
Like that. So that makes a lot of sense.
Yeah, the small modular reactors around the shipping container size are. They'll basically power a medium-sized town for like 80 years.
Yeah.
So it's like, and those nuclear submarines, they only have to come into port for food. They don't have to come into port for any other reason.
Yeah.
So
and that just shows the actual technology the military has been using for a very long time.
Yeah. So I think that'll kind of be the next step. I mean, typically Silex went up this week because it's been working on an enrichment technology for about 27 years. That's never going to come. So let's check. I guarantee you there'll be a cap raise in Silex in the next month or so, depending on where it gets to. So
so what's next?
What do we got next? So
trade of the week.
Defend. Oh, nice.
Yes.
I think we've had it before.
Yeah. But basically, what we're doing is we're adding to it. So I forget. So it depends on where clients bought, but maybe around here.
No. It was in April.
Okay.
So we bought, I think, somewhere around the $31 mark, I believe, because we're up about 17% on the first clip.
Correct. So one of the sort of counterintuitive things with trading is that, when you're on a winner, you always just want to take it. Like that's psychologically what you want to do. Mathematically and from an actual proper trading perspective, you actually want to add to your winners. So this is running. We've just had a lot of another catalyst for this to run even further, so we're just adding to it.
So, and I'd like to give myself a pat on the back here, just to show that a leopard can change its spots. I am normally...
You'd be against this.
It was my suggestion.
Yeah.
So, it's, an old dog can learn new tricks, basically, is what I'm saying. Add to the fact that, and we've been buying global defence stocks as well on top.
Mm-hmm.
So, and this is just a little bit of cream, so I totally approve of the trade of the week because, albeit that I was at the call and I had to message you guys. I'm like, quick, we should have to defend. I think that one, bottom left, top right. It's good to be on board.
There you go.
So
well, the great thing about it is that we're adding, so that means that our average will probably be midway between the top there. So it's not like we're just buying the absolute top and just going on there. We're adding to it. Obviously, that will raise our sort of entry price.
Yeah, I think it's roughly about up. I think we didn't buy the high today, but we bought close. I think most people would be up about 8% now, but on double the size.
Exactly.
And we like the thematic long term anyway.
Yeah.
So it's got a catalyst and it's got an underlying spending with the world's stickiest customers being countries who are fearful of their defence. So I don't think you get a better catalyst than that, to be honest.
Exactly. So let's just ride that wave.
I've had an addition here with the fear and greed.
Okay.
That's the history.
Okay.
So yeah, and being the chief graphic design officer, most of the time it was really bugging me that it wasn't all lining up really nicely. So I've added that in. So the market momentum to fear that that shocked me a bit, to be honest. So obviously things are stalled.
That's interesting. The breadth, extreme greed.
Yeah, so
I'm guessing that'll change tonight.
That will definitely.
So obviously vol will. I didn't look at the Australian vol today, but
vol last night was up 5% leading in. Okay. There was a bunch of warning signs. I mean, even on our internal chat, I said, "Be careful tonight."
Mm-hmm.
Because the embassies, someone buddy burns their toast, they evacuate an embassy. The fire alarm's gone off. But when they started moving US troops away from the Iranian border, and the International Energy Commission basically validated that they were enriching beyond what is needed for power, and Trump goes, we're not getting involved, but you go for your life. I'm like, wow, something's happening here. We're still in. Yeah, I mean that's going to change.
Yeah,
I mean that'd probably be already in neutral.
Yeah. So I forget. So you broke your streak. Well, what did you call last week? And
I called bearish, but I basically just said, but not by much, basically. So as I said, the difference would have been the futures move.
Yeah.
And I'd be because the last 2 weeks I've been, to be honest, ambivalent. I was just guessing, flip a coin for 0.5% either way, and it's pretty much been that.
Mm-hmm.
I feel like it's going to be the same again this week. I think the Middle East conflicts they stop pretty quick.
Mm-hmm.
The move in oil worries me because we haven't had that move. We haven't had enough 8%
spike like that for a long time
on top of an already up 8%. Yeah. But what more expensive oil also, if we've had a 15% rally, that ain't good for the economy.
No.
And the numbers are softening on a forward PE basis. I saw a good market map on Twitter the other day. The entire US market on a forward PE basis is extremely overpriced. I'm definitely bearish, but whether it happens next week or whatever and that trade deal that Trump's is just crap. Basically, my view on that is he's essentially said that a deal's been done and got it out there public first, so because he hasn't got the result that he wants, so then he can accuse of changing the deal when they don't come to terms. But China's only put a 6-month cap on releasing rare earths back, and Trump's saying, we're making them pay it forward. It's like, well, okay, there's line number one. Give us our rare earths up front, and they're like,
yeah.
So, never let the lie get in the way of a true story.
All right, so with that, I will be bearish for next week. I'm a momentum guy. It looked like this market, was just chugging along. First time, I told you yesterday, first time I've seen good news not reflecting in the price. And then now we've got a catalyst. So I think that's the top for now, and we'll have bearish momentum. Once the bearish algos take over, I think we'll start seeing a decent.
If it starts to snowball, this thing's cooked. I genuinely think I just kept my mouth shut the last few weeks because I knew it wasn't going to go anywhere, and I'm just I'm sick of having to defend myself on them. But statistically, this thing revisits the low.
Yeah, and
it doesn't matter that everyone now it's not a bear market rally anymore because it's jumped more than X%. Well, if you put in how much higher vol generally is these days than history, and how much we tend to overextend by 5 to 10% either way,
this is actually normal.
This is probably about the cap, really. And the key thing from a fundamental aspect is, if nothing, hallmark of a bear market rally is it rallies and then people get optimistic when nothing has fundamentally changed, and nothing has fundamentally changed. Still got 10% tariffs, still no trade deals done, apart from the UK, which they had a trade deficit with. Europe's kind of still laughing at them. We've got further conflicts going on. Putin's been breaching God knows everyone's airspace. There's potentially more sanctions. Earnings were good, but they were backward looking. They were pre-Liberation Day, all of them. So I'm getting the bear seat back out because because I think if it gathers steam, I think you're right. The momentum works both ways. But I do believe though the next move down, wherever it bottoms, that's probably your best buying opportunity for about 2 years. So if you manage it well, I think you literally will. You'd be the broker's worst nightmare. A client that doesn't need to speak to you or turn over for the next 2 years.
Yeah. Well, look, the thing is, so apart from defend, we did put out some BBOS as well, things like that. So
which is the short ETF.
Yeah. So hopefully we do get some downward momentum because
I've still got BBOS on, which is where basically it had to make a new record high, and I stuck to the stock. Everyone else, the other boys here doing the global alpha, they've been killing it all month, so it was hard for them not to be bullish. So they got out, but they're I think they're up about 15% in their last 5 recs in the last month. So you know what, pretty happy for them to have got. I think they dropped 2% on it. I was kind of happy to hang on. So I do agree with you in the gold miners though. Like we obviously bought back into Newmont, but it's pumping now. I would be surprised. I'm feeling more sell side potentially. If that breaks to a new high on panic, I think I'm
talking about the miners or
the Newmont particularly. I just think gold's it's been the best rally I think just about in history in a 2 or 3 year period.
Yep.
I think it probably has a breather for a bit, and you can probably see that with silver and platinum coming. People are starting to look for other options. But we will definitely know more on Mondays. It'd be a nervous old 2 days if you're in an Airbnb in Tehran. So be trying to get out. But stay safe out there. We will speak to you next week.
Thanks a lot.